President Biden's been out there on the campaign trail trying to defend his economic record. He says the polls, like this, have it all wrong. Let's bring Doug Flynn in, certified financial planner, co-founder at Flynn Zito, to see who's right. Doug graduated college a number of years ago, but he could still talk about this. So whether it's college kids or somebody else, this whole idea of what's the economy really like, what kind of job market am I going into? What would you say it's like right now? How would you characterize it if they polled you?
Yeah, he mentioned, look at the market, and you want to be really careful making comparisons using the market as a barometer for the economy, because they're very different things. And, there's the economy, the global economy, and then there's your own personal economy. And what people are seeing and feeling is obviously inflation. They see gas prices. They have high interest rates. They have unaffordable housing in many cases. So, that's what people are feeling. And so they take a look out there and they don't feel really great about the near term, just because of, it's recency bias. That's how things are recently. So that's kind of what's affecting people at the moment. It's going to take some of that to turn for them to feel a little bit better going forward. And even though it's improved from a year ago, it's very flat right now. Things are not getting any better as to how people are feeling right now.
Well, in addition to the stock market, the other thing the president talked a lot about, he talks a lot about this all the time, including yesterday in Wisconsin, is this this idea of economic fairness, right? Let's take a listen.
Doing what's always worked in this country, giving people a fair shot, leaving nobody behind, and grow the economy in the middle out, the bottom up, not the top down. When that happens, everybody does well.
Oh, Doug's good. Come on, I don't want to hear this socialism. You financial guys like you don't like that kind of thing, do you?
No, because, it's always about trying to equal out the outcome, which is impossible to do. You're always going to have people who are going to want to achieve more and do more, and that's fine. There's nothing wrong with having different types of people do different things. And so it's about the opportunity, right? And I think people are not necessarily feeling that there are as many opportunities out there as there once were. And that's partly why I think people are looking more towards entrepreneurship, because you have more direct control over your own situation. When you do that, you don't want to rely on big companies and other things, even though those might be good jobs. People are definitely looking into that as another way to perhaps get their piece if they're interested in doing that.
All right, let's talk a little bit to be serious, about corporate America and how people are doing. We have 2 minutes left in the trading day, profits and losses and all that kind of thing, and where companies are. There was an interesting story this morning about buybacks, that stock buybacks are making a comeback, and that corporate America's out there. The spending spree was the headline in the Journal.
Right.
What does that mean? What does it tell you? What's the message in that? Anything?
Yeah, quite a lot, actually. So just to back up for a second, if you have a company that has 1 million shares out there and they make $1 million a year, that means their earnings per share is basically $1. And so what happens is, if they buy back their own shares, let's say they buy back 100,000 shares. Now there's only 900,000 shares out there, but they still make $1 million. Therefore, their earnings per share goes up, in this case, to $1.11. And so it's a way to drive the earnings per share. Now, that buying back to drive up your earnings, which drives up your share price, only works if you're also doing other things, like you're investing in growth, like a lot of the tech companies are investing in AI.
Yeah.
If they're doing that along with share buybacks, that's a good thing.
That's a lot of what's happening, right, with tech, or so it's a good sign mostly?
It is for those. If you're only doing that, sometimes you look at a company that's all they're doing, they don't have any other growth aspects. That's a sign that they can't figure out what else to do with their money. That's not a good sign. So you want to look for the combination of share buybacks and growth in other areas that they see a lot of places they could put their money in addition to their own stock. And so those things can actually be a really good thing. And those have increased a lot over last year. And it looks like you might even get more than $1 trillion in buybacks next year, which means some good things for the market. Now, whether that translates to the economy, we'll see.
Another great conversation as always, Doug. I tricked you into coming out against economic fairness, which is good. So, so just forward your emails to Claudia, and she'll take them all behind. If you get any hate mail. Thank you, Doug. We'll talk to you again soon. Doug Flynn. He does want everybody to have a fair shot. He was just kidding.